Welcome to Trading Lounge and the Forex report for the European crosses, and starting with the US dollar index on the 4-hour chart here, just coming back somewhat. When we reach the major trading level 1 here, 100, we're looking for a reaction pattern, a corrective pattern, a bullish corrective pattern. So we're looking for an A wave, a B wave in 3, and then the C wave is always in 5 waves, except in a triangle pattern. So we're looking here at down for 1, back for 2, wave 3, wave 4 here that can pull back to 96, which is the 38.2 retracement level of wave 3 here, roughly. Better double check that there. Yep, so that's what we're looking for there, but near enough is good enough. And then wave 5 to the downside here, and that will complete the correction, and then we'll move up from that point. So most of the other ones that we're going to be looking at will be doing the mirror opposite that. They're actually pulling back in their 4th waves, but as a mirror image. So when we look at the euro here, just in the bigger picture here, while it's here, we're looking for wave 4. And wave 4, not that you can see it that clearly, pulls back to the wave 4 of 1 lesser degree, so into the 114, 115, and that will be the 3rd wave. So we're looking for 1, 2, 3, 4, 5 down here, then the A, the B, and the C wave, pulling back to the 4th wave of 1 lesser degree, or 38.2% roughly. So that's what we're looking at here as the mirror image. So from wave 3, the A, an A and a B and a C for the B wave, and then the C wave up here as wave 1, wave 2, wave 3 and wave 4. Wave 4 can pull back lower in here just yet, but it can also pull back to the 4th wave of 1 lesser degree. And yeah, it depends on other things as well, headline driven news, holidays, all those sorts of things. But I think our best bet in a lot of these instances here is to understand that wave 4, if wave 2 is simple and sharp, which it is, then the alternative thing in nature will be complicated. So we can expect a complicated wave 4 here. So we don't, in Elliott terms, we don't normally trade wave 4s because they have overlapping price structures and so forth, and it's best to wait for them to mature. So the wave 5 will be the leg that we'll be looking to trade in. And yeah, so it's quite clear that we've got a nice 3rd wave and looking for the 4th wave, and then up for the 5th wave here. So just drilling in here a little bit. The 4th wave here, as it's moving down through here, is a little bit, it's starting to get a little bit, look, it's just not, it's just the first leg down is not matured, so it leaves it open to interpretation somewhat. And because we don't trade it, it's not such a big deal as such. You know, I was sort of thinking that we have an A, B, C here for the A wave, and then an A and a B and a C here for the B wave, and then down for the C wave, and then up from that point there. So I was looking for something of this nature here, a little move up into, so basically an A, B, and C here for the A wave, an A and a B and a C here for the B wave, and then down for the C wave. But please don't get stuck on that, because I don't have a lot of confidence in that call. Obviously, the trend is still slipping to the downside, and our target is the 38.2 retracement level, which is 1.105, actually sort of closer to 3, but it's 553. But it doesn't really matter. The main point here is to simply allow the US dollar index to complete its upside, and the euro here to complete its downside. And this is the same for the pound as well, except for the pound fell out of bed here rather sharply, but I'm still going to stay with the pattern of wave 4 here, even though it will overlap wave 1. I would only turn bearish on this if the 150 became the retested resistance. Then we'd need to look at the bearish picture from that point, and we would need to look at this as an A wave and a B wave and a C wave up to here. Some of the markets in this wave 4 in the mirror image of the US dollar, some like the cable here have moved down quite strongly. Others have hardly moved down at all. So there's, well, that's probably on the yen crosses really, but yeah, they've all got their own, doing their own little thing. But I think it's important to keep them in that group for the time being anyway. Now, once again here, this is, well, it's coming into support here, so it's going to get choppy, it's going to get bouncy. It's not really it's not really good trading. There's different ways to count this. I've used this lower high here as the fifth of the third wave here. One of the reasons for that is because in some of the other markets, this one here has actually made the high here, so it's just a better fit overall. We can see that the market is slowing down here. A trend's got a beginning, a middle, and an end. So we're sort of in the end choppy process. Yes, it can come down further, but I think in terms of actually trading, then we allow it to move down, and then we really need to see an impulse wave to the upside here. An impulse wave, of course, is the 5-wave structure here, then the A, then the B, and the C here. And then we look to catch the third wave to the upside there. So, you know, we don't know if this is actually completed here yet, you know, and we don't have this either. So there's still more, we still need more time for this one. And well, all of them really. Here's another one as well. This is the pound yen. And, you know, we know that we had resistance here because, or same with all of these, they're all pretty much at their old highs. And that's partly one of the reasons that the sellers supply whatever coming into play somewhat, plus the European holidays have been in there as well, so lower volumes on trades. But once again, it is possible to look at these as an A and a B and a C, but I think we need to stay with the 1 and the 2 and the 3 and the wave 4 here. And once again, you can see that this has got an ending pattern here, very much the same as the cable as such. I'm just drilling in here a little bit here. So it's got that same sort of ending pattern, but it's very choppy price action in here, and it's a little bit difficult to interpret. But once again, I think that we just allow it to move down. We know that it's moving into the oversold sort of area, and it's slowing down because of the price action. And I think we just allow it to you know, to complete its structure down here first. Obviously the next support is at 181, and the other markets have got further to go down, so this one will have further to go down as well. The euro yen, it hasn't really pulled back at all, has it? Not much in compared to the other ones. Yes, it's got a resistance here. There's, well, I'll call it a zone because there's over yonder here, there's quite a, you know, a range of space around the 135, 136 sort of area. So once again, this market's pulling back quite nicely. So it's 38.2 retracement level from wave 2 to wave 3 here is just here, basically where that is here. So still expecting it to move lower through here, but down into 133. So because this one is pulling down less, it's probably a better trade to the upside when the 5 waves comes through here. Okay, and just drilling in here 2 hours. Yeah, look, and once again, from wave 3 to wave 4 here, I'm only guessing here. Okay, so I don't know what the correct count is here. Yes, I understand these legs and so forth, and that's why I've got this as wave A and wave B here and looking for wave C down here. But it is a bit of a guess. But look, you know, as a betting person, then, you know, you'd want to be, you know, on the short side while you're you know, below these supply lines here. And this little move here appears to be corrective here, so these lows should be taken out here. This move down through here so far to this point is also bullish corrective, so it can be up for 1 and back for 2 here and up. So if you're going to short it, take that low out there. The euro pound is also quite strong here, as you see as well. It hasn't really retraced back much at all with the same pattern as the other markets as well. So this might be, and we knew that the euro was gaining strength all the way through. Well, we anticipated it through here when then we got the evidence, and and it's still the case because it hasn't pulled back here. And yeah, one of the key things here, though, same with most markets as well, is that the third wave here has got the extension in it. So wave 5 here can be roughly the same size as wave 1, which is not very exciting here. So just bear that in mind and use that analysis with the other markets as well. So just drilling in here a little bit, it's the same. This is the 38.2 retracement level. This is the wave 4 of 1 lesser degree. So it can come back here to this level here in terms of its pattern because it's a bit more buoyant than the other ones. I was looking at it as an A and a B and a C just for the A wave here, then an A and a B and a C here for the B wave, and then down for the C wave. But once again, if it takes out this low here, that means that the 72 here, which is important to me, that the orange line here, then pretty way off there, aren't I? Where are we here? Close enough. If this low gets taken out here, then that becomes the retested resistance, because the market was support here and now it's developing as resistance. So that would be the trigger to short that low in there for that. And the US dollar yen is slowly setting up on the 120 as a bit of a setup here, because we've got an impulse wave up through here out of this triangle here, and we'll be looking. We want to see a move below the 120, and then we can look to trade to the long side. We want a correction here. Okay, we're starting to get one. We've been looking for wave. Well, 1, 2, 3, 4, and all the way up for 5 here. So really still want to, it's good if the market can come down here, because then it's checking demand and support, and then finding support here that we don't chase the first high above the level. We wait for the retest and we wait for it to sit on there, and then we can take out either this high or this high in that move to the upside there. By all means, though, if this high here gets taken out, then you also want to be long from that point. If that way you don't miss the trend to the upside. Okay, but otherwise just wait for this correction to unfold. All right, thanks for tuning in. Cheers.